Good morning. Welcome to Prop Firm Dreams. If you're new to the channel, I'm funded with 6 firms: Tradeify, TickTick, My Funded Futures, Purdia, Apex, and Savius. And today we are going to be talking about TickTickTrader. In particular, they made some pretty drastic rule changes this week, and traders are not happy about it. Let's get into it. Dear TickTick community, we are writing to inform you about important updates that will take effect. We have observed significant prohibited trading activity such as hedging and clusters, which has cost the firms hundreds of thousands of dollars in undeserved payouts. This reminds you of anyone? Remember the failed prop firm Profit Trade in the fall of 2024? They're complaining about such activities before they went under. In response, we are implementing the following updates. Updated drawdown limits. We're introducing the following drawdown limits for direct accounts. So for followers of this channel, you know that I have a lot of straight to funding accounts. In particular, I have 5 of the 250K. Now, they've got to be bleeding money because most firms reduce the number of accounts you could have. I have 5 of these, but they reduced them to 3, and now they're making more changes aimed at, in my view, to save money. So moving forward, these all were 5% drawdowns, but now you're going to be paying several $100s in order to get 4, 6, and 9,000. For comparison, my 250K has a drawdown of 12,500, and so that's going to get reduced. You're going to be getting less for your money. The drawdown limit for the 50K base direct accounts remain unchanged. Here's a pro tip: whether it's Tradeify, TickTick, or anybody else, the 50Ks straight to funded are not good deals. The daily loss limit also remains unchanged. Pro tip: if you're relying on the daily loss limit, then you don't have good risk management. Withdrawals from the safety threshold. This is the big one. Starting March 24th, so basically starting next week, withdrawals must be made from profits exceeding the safety threshold for direct accounts. Withdrawals from within the safety threshold will no longer be allowed. So this is a big one. So basically before, in straight to funding, the way it worked is you bought an account, you skip the evaluation, and then you make it to the buffer, and then you can withdraw 3K or 4K or whatever it is. Now they're saying you got to make it to the buffer and make money on top of that. So it's kind of like a stealth eval already, which is fine if you want to do an eval. But if you're like me, you purchase straight to funding so you can skip the eval. Now you're going to be spending several $100s and then still have to cross the buffer. It says payouts before March 23rd are exempt from this update and can still be made from within the safety threshold. So to be clear, they basically gave you a half a week. So if you're about to get a payout, then you can still take it, but they're going to change the rules on us. Virtual live arcade. This is what they're calling the live funding after you get caught up to live. They're calling it an incentive for being a live trader, but in reality, there's not a lot of live traders. And so this is mostly going to affect the sim traders. So the sim phase profit split will change to 80-20 instead of the previous 90-10. So that's a big deal. So for someone like me, who, I've gotten quite a few payouts from TickTick already, it's effectively going to turn a $18,000 payout into a $16,000 payout. So this will directly reduce my payout by $2,000. And compared to the competitors who are still a 90-10 split, this is effectively a weaker offering than their competitors. And then they have the micro scalping rule update that they updated earlier in the month, which doesn't really affect me anyway because I'm not a micro scalper. So this effectively has the result of TickTickTrader trying to save money. Sounds like they're bleeding money and they're making these rule changes to, in fact, make it harder for the trader to get a payout. Less money in your pocket, more money kept in theirs. Let's see what some of the traders around the Twitter and Discord have to say. TickTickTrader bummed me out. I've been trading very patiently, and now they've made it very hard to get a payout on straight to funded. Nigel wrote, 80-20 is pretty bad. Also, the talk of live focus is a joke. Been waiting 1+ month now for my live account with TickTickTrader, and there has been 0 communication. Brian, one of their few live traders, wrote earlier this month, getting my live TickTickTrader account tomorrow after 2 months wait, signed 5 different documents, submitted my passport and bank statements, went through orientation and risk coaching, strict risk parameters, $500 max per trade, $1,200 daily loss limit, and a mandatory OBS recording for every trade. Now thinking to myself, Is this worth it? Question mark. White Bear wrote, this new TickTickTrader rule doesn't seem right. I'm about 3,000 on the 100K direct after 1 month of trading. I was aiming to the 5K target to ask a payout, and now I'm back almost to square one. I guess I'll double the sizes and see what happens. Anyway, I wouldn't have subscribed with them from the beginning with this new rule. Moreover, with this new rule, it would have been reasonable to cancel the 2% minimum target on the second payout. I mean, okay, I leave the safety net, but let me withdraw what I want. When I want, at least. From John, yeah, keeping the buffer unchanged is like having to pass an evaluation before, so the whole interest in straight to funded is lost. Let's see, but I expect that it will be hard for them to bring new business and new traders. I'm in a similar situation as you. I'm almost to pay out on my 150K, and with sudden change, I'll have to reach 10.5K profit to be able to request 3K, from which they'll deduct 20%. And here we have Brett Simba, CEO of Tradeify, came in to dunk on TickTick in their moment of distress. Also, TickTick will go under in a few months. They still haven't changed their number one problem with straight to funding. That's my opinion still. Only reason they aren't now is they have their 4-year cash reserve. They probably will just do more retroactive stuff, but we all know the straight to funding kings can't be reclaimed. I can't argue with them there. Tradeify definitely has the edge in the market and has a much better offering. They tried to make their plans easier than us to get more market share, but they soon learned they lose money after 3 months that way. We would have gone under as well if we hadn't changed our rules. So if you can't tell, I'm not a big fan of the rule changes. It takes money out of my pocket, and I hate retroactive rule changes. You know, you pay for a certain rule set, and as you're not grandfathered in, they basically have these stopgaps. I haven't had a problem with payouts with TickTickTrader, but moving forward, it sounds like a lot of people are. And when I'm up for my next payout in a few weeks, I'm going to be getting less money, and it's going to be harder for me. And God forbid they pull me up to live after my next payout, because then they're basically pulling a liability, in my case, me, a profitable trader, and then set me on the shelf for 2 months where I'm not able to trade. So I can no longer in good conscience recommend TickTickTrader. Their evals aren't that competitive with others, and now their straight to funding, which was competitive, is now much worse, and it's much harder to get your money out. So I think I have to side with Brett on this one. Tradeify is on top right now between their straight to funding and the offering they have for their evaluations. You still have a week if you're interested in getting the lowest all-in cost 50K eval. Use code DREAM. As for TickTick, I would employ caution. When there's smoke, there's often fire. And this definitely raises some red flags about the solvency of TickTick moving forward. All right, let's get to the charts. All right, it is the top of the hour, just past 9 o'clock. We're a mean reversion trader, so we're looking for price to be outside the Bollinger Bands, and then we're looking to go long. Now, currently, price is looking very bearish, and I'm not optimistic, but maybe we can get something at 10 o'clock. That would be great. So we'll check back then. All right, we got some wiki action at the open. So not loving that, but that's the way it goes sometimes. And I'll catch you guys all on Monday. Peace.